Hey, badass business owners, welcome to another episode of the Local Small Business Coach Podcast, where each episode we work on getting you to $100,000 in take-home pay. So if you're all ready to boost your profits, increase your sales, improve your processes, and develop stronger teams so you can stop living job to job, then let's dive in. Hey, badass business owners, it's Tammy, and today we are going to dive into our next episode of Know Your Business Numbers. We're going to talk about the most basic thing that you need to know and understand when it comes to your business and your numbers, and that has to do with your profit and loss statement. Every single one of you should have one of these. Every single one of you should be able to have one report that you put into your accounting, whether you do it yourself through QuickBooks, FreshBooks, any other accounting software that you might be using, anything that you present over to your accountant, to somebody who helps you out. They also probably put together a profit and loss statement for you. So one way or another, you probably have this. Here's the thing. The big mistake that I see most of you guys make is that you don't even look at it. And the reality is you should be looking at it on a monthly basis as well as a yearly basis, and then look for trends, so multiple years on top of each other. But I think a lot of this comes from what I was talking about last episode, where I talked about fear of finding out, the fear of not knowing. And a lot of you guys are afraid to even dive into this information because to you it feels, one, you don't want to know the numbers. That's where the fear comes in. The second piece that I find is that people just don't know they need to know this, or they think they don't need to know it. They've got money in their pocket. The business seems to be doing well. Why do I need to look at the numbers? Well, here's the thing. You want to look at the numbers because you want to know why you're doing well, but I'm going to bet dollars to donuts. Any of you that are doing well and you feel like you're doing good and you never look at your profit and loss and you don't think you need to, I'll guarantee you that I can find you more money without you having to work more hours. Yeah, I would bet majority of you that are in that situation could make a lot more money without having to work another hour on top of what you are doing, and you can make more business. And it all comes down to how you are, what's inside your profit and loss and what you can find in there. So with that said, let's kind of talk a little bit about a profit and loss. Basically what your profit and loss statement is, it is your business's report card. It's what tells you what it is and how your business is doing when it comes to the various areas of what you've got going on a regular basis. You might have had people refer to it as an income statement as well, but most people call it a profit and loss, or they call it a P&L. You'll hear it called a P&L sometimes. And basically, it's a quick snapshot of your sales, your cost of goods sold, your expenses, your profits, and it lets you know, its main purpose is, it lets you know if you're profitable or not. And that's the main reason that what we get from that profit and loss statement. They look a little different depending upon who puts it out for you, so don't get too hung up on that. You'll see this when you see the video. I show a couple of different examples. The main thing is they all have the same information, same categories. How in-depth they go can change based off of who's doing it. And my main goal is for you to understand the basics of it, but I'm really going to challenge you in the future. And I'm really going to dive into this in the course that I'm putting together, that the more you dive into those things, the more money that you're going to make. All right. We'll talk a little bit about that here in this episode, but we'll dive in really big there. Now, there's really four or five main things that you're going to get off of your profit and loss statement. At the very top of it, and I know you don't have one in front of you, so there is a course or a video that's a companion video that goes along with this that I did just put on YouTube, on the YouTube channel, localsmallbusinesscoach.tv, as well as I'll put the link in the show notes so you can hit that after the episode. But basically what happens is your top line, everything is based off of sales. Sometimes it's referred to as revenue, but it's total sales. It's all of the sales that you bring into the company. So everything on your profit and loss statement is based off of percentages. So it assumes that for every dollar, a certain piece of that dollar is split up among different categories. And that's why sometimes people get screwed up by the percentages, because they don't kind of look at it that way. That's the best way to look at it, is each percentage. Think of 100% as $1, and then every percentage you see below that as a piece of that dollar. So when you have your sales, you're going to have that either as a lump number or you're going to have it broken down into categories. I personally am a fan of breaking it into categories where you break your business up. So for example, in the ice cream shop, I would have it as cups and cones. I would have it as prepackaged stuff. I'd have it as sundaes. I'd have it as drinks. I'd have it as the different categories. This way I can see what pieces of my sales, once again, went to what. So it's kind of taking that same thing as if all of my sales equaled 100% and was $1. If I knew that 50 cents of every dollar came from cups and cones, then I knew that was the largest piece of my business, and forward and on, so on and so on. So in your particular business, you probably have categories. If you think about everything that you offer, maybe you have products and maybe you have a service that you do. Maybe you have a brick and mortar and you have a service base where you go out into homes. I'd break those up at minimum. But the more you can break it up, not like super crazy, you shouldn't have like 10 or 12 categories, but the more you can kind of break that puppy up, the better you can see and use those numbers in the future. So I'm a big fan of breaking things down. All right, next up, after your sales, you're going to have your cost of goods sold, sometimes referred to as COGS. Basically, it's going to be all of the pieces that help put together your product and or your service. So for example, we'll keep using the ice cream as an example. In order for me to sell ice cream, I had cost of goods. I had the actual ice cream, obviously. I had the packaging because I had to put it in cups and cones and stuff like that. If I put a bag, a spoon, a fork. Who eats ice cream with a fork? All right, there's a couple of you that eat ice cream with a fork. But straws, all those pieces, those are all parts of cost of goods sold. So basically anything that puts together that product or service. If I'm going to put a water heater in, I'm going to have the water heater. I'm going to have the supply lines. I'm going to have any other parts that go along into that. Now, here's one that I get asked all the time. What about payroll? How should I look at payroll? Well, payroll is going to be broken down into two types of groups, okay? There's expenses and parts that have to do with the actual putting the thing together, and then there's parts that have to do with the selling of it, the maintaining of the business, and everything else. So, for example, if I run if somebody assembles something, then they're part of putting. If I can't sell that product without somebody putting it together, then it's a cost of good, okay? Because there's no way I can sell that product or service without that person. However, if that person is just serving sales behind the scenes, they're doing accounting, they're doing something else that has nothing to do with that product or service, they would be considered an expense. So when it comes to payroll, you could have your payroll actually split into two. If you want to get technical, you would split them up. If you want to just put them in your cost of goods or you put them all into your expenses, that's fine as well. I would recommend that if it doesn't have anything to do with creating that product or the making of that product, then just put it in under your expenses. It'll probably be easier for you to track. For example, if you have management teams and people that you pay, they're actually not assembling and putting things together. Typically, they're running the business. They would be an expense. So payroll gets a little tricky for people. So if you find that payroll tends to be more tricky for you, go ahead and put it in as an expense for now. And then as you get better at it, you can start separating that out. But mainly is what you want to look at is your cost of goods sold. That's going to be your best way is cost of goods are just basically the other products that are used to put together your product or service. Hope that makes sense. All right. Now that's going to come out to a certain percentage of your business. So that could be 50 cents. That could be 30 cents out of every dollar. It's going to be a percentage. So we're going to make up a fictitious business. We're going to say that business does $50,000 in sales. And out of that $50,000 it does in sales, we're going to say that its COGS, its cost of goods sold, came to $27,000, in which case that's going to put that business's percentage of COGS, of cost of goods, at 54%. So 54 cents out of every dollar goes towards their cost of goods sold. And that's going to be on your profit and loss because you're going to have your cost of goods broken down. So for some of you, you might have a basic one that just has that total number. but I'm encouraging you to have that broken down by category as well. So for example, on mine, I had the ice cream as a category. I had the paper bags, anything that was more of the packaging piece was one. If it was cups, I had cups as one. So I knew everywhere that I spent money. And by the way, that's once again, when you break it down, that's where you're going to find the cost savings in the future. That's where you're going to find the opportunities for both sales and for profitability. So the more broken down, the better for you. Now, one of the numbers that you hear me talk about all the time is you need to know what your gross profit is. You need to know what your gross profit is on every item and product that you sell. But you also need to know for the entire business, and it's basically figured out the same way, because on your P&L, what's going to happen is after your sales and after your cost of goods sold, it's going to show you your gross profit. So your gross profit is before the expenses or anything else that you take off. So in this particular case, we have sales of $50,000. We have cost of goods sold of $27,000, which leaves a remainder of $23,000. So we know that $23,000 is the gross profit that the business made before it pays anything else. And we all know that, as I've been trying to teach, is that everything has a percentage, and it's a percentage of sales. So if we take our $23,000 divided by our $50,000, we get 46%. So basically 46% of all of our sales in general becomes gross profit. Yes, it may differ when it comes to the individual products and services that we offer. But when we're figuring out general numbers about what we need to do, the average is really handy. And here's where you get your average. A lot of you guys have been asking, well, where do I go for the average for my business? Because my business is different depending upon what I sell. Well, to get what your current business average is for your gross profit, you actually use your P&L, and it will tell you right there in our fictitious business, it's 46%. Basically, 46 cents out of every dollar is gross profit. Now, on your P&L, as we continue to work our way down, the next category you're going to have is your expenses. This one can be very long or it could be very short. It depends upon your expenses. Though also, once again, if you really want to dive into your P&L and save money and to create more profits for yourself, what you're going to do is break that puppy down into different categories. The cool thing is with most of the QuickBooks and the different programs that are out there, it automatically will have you categorize stuff when you have your bills and there are different things that come in. You're going to have your fixed expenses and you're going to have your variable costs, which are what we talked about last time. Fixed are things that don't change month to month. For example, your rent, typically things, insurance, equipment that you rent, stuff like that. And then you have variable, which kind of go up and down with sales. So anything that's based off of a percentage of sales. Sometimes your advertising is a percentage of sales. Sometimes it's fixed. You also have your employees that could be variable because of the seasonality and stuff like that. So in our fictitious business, we're going to say when we look at our advertising, our utilities, our trash, our storage, our rentals, it's going to have all of those different categories that are on there. All of those expenses get added up. So in our fictitious business, we're going to say that comes to $12,000. So when we're looking at our expenses, we know now that we have $12,000 that comes out of our $50,000. So what percentage is that? Our $12,000 divided by the $50,000 tells us that 24% is due to expenses. And we now know that a quarter of every dollar goes towards expenses, right? So 24 cents out of every dollar goes towards expenses. And whether that's a good or a bad number, it just depends upon the business. In the course, I'm going to use an actual profit and loss. It's actually going to show you that in some cases, this could be as high as 50% goes towards your expenses. And that's where businesses tend to struggle and fail, is because the expenses run so high. So you'll see an example of a high expenses when you look at the video that I'm going to show you. Now, from your expenses, okay, so you had your gross profit, which was your sales after your cost of goods. You had your gross profit. Then we're going to take your expenses and we're going to take those out. And once you take out your expenses, you're left with what's called your operating profit. And your operating profit is everything after your cost of goods and your expenses. And in this case, we had our $50,000 minus our $27,000 for cost of goods, which left us with $23,000 in gross profit minus our expenses. So take off an additional $12,000. It left us with $11,000 of operating profit, which came to 22%, which means that for every dollar that this fictitious business makes, it keeps 22 cents as operating profit. But we're not done there, because there are a few other things that typically will come off. It is based off of your operating profit that you typically pay your taxes on the business. Now, obviously, an accountant, a tax professional can give you the exact number, but in general, you're going to be paying your taxes off of your operating profit. So in this case, on this particular business, they're going to pay taxes off of the $11,000. Let's just assume they pay 15% in taxes, which means they're going to pay about $1,650 when it comes to taxes. Then after your taxes, you're going to have some depreciation. You're going to have a few other little things in there. You guys aren't really big businesses, so you're not going to have tons in this category unless you have heavy equipment or, a lot of equipment costs and stuff like that. But most of you, for the most part, you've been living off of your operating expenses. You forget to set aside money for your taxes, which creates part of your problem. But really what you need to do is your net income is after you pay your taxes and other monies that you have out there. And that's where it's important with your net income to know that. So your net income in this particular case is going to be $9,000 based off of our example. And that's 18%. So basically this business the owner gets to take 18% as net income with this particular business. So you can see there's a lot of information. I know it was a lot to digest as I was going through the different areas on this particular P&L, but those are the basics that you need to know. Your sales, your cost of goods, which is going to tell you your gross profit. Then you're going to take your expenses off. That's going to give you your operating profit. And then you're going to take off, taxes, interest, stuff like that. There's a few other things. And you're going to get to your net income. And then depending upon how you pay yourself, you might be paying yourself as an employee, in which case you might be up in the expenses category or even possibly the cost of goods, as I was sharing earlier. And then your net profit is, your net income, is the company's profit overall. But for most of you, I will tell you, you don't put yourself in as payroll. You just kind of live off of the net income of the company and what is left over. The problem is a lot of you guys kind of take that money long before you pay your expenses and pay everything else that you need to, which is what keeps getting you into trouble. And that's why it's important that you look at your P&L and you understand on your profit and loss exactly where everything falls and what it should look like. Now, I know it's a lot to take in over a podcast. It's very difficult to digest all of this. So I do encourage you to please watch the video. And I really encourage you that after you watch the video or even after you listen to this podcast, do me a favor, please grab your profit and loss statement for last year. With taxes just going on, you should have 2018. If you've been keying this stuff in all the time, if you use QuickBooks or some other thing, you can pull last month's, you can pull last year's, you can pull it anytime. I highly encourage you to do that. Just look at it. Just pull it out, look at it, and try to see if it makes a little bit more sense to you. And if you are still, some tax person has your stuff and you haven't had a chance to look at it yet, then grab the last year that you do have. Grab the information. I want you to start looking at it. I want you to start getting comfortable with it. I want you to be able to understand your profit and loss backwards and forwards. You don't have to memorize it, but you have to memorize how to read it, how to understand it. If you really want to grow your profitability in your business, your P&L is the key to it. This is what every major business uses as its cornerstone for the profitability of the company. Because from this, you can gather so much intel and so much information on your business that you really can grow your business. And you need to know what it is that you put, how much you spend in your COGS, what percentage is that, because it really allows you to know. So for example, and I'm just going to use a quick example of why this can be used. If you know your gross profit in most cases for the business is 46 cents. Remember that earlier we said 46% is your overall gross profit. If you have a product or service out there, when you look at it individually and you discover that it only makes you 34% profitability and it happens to be your largest category, then that is what's pulling your gross profit down. And even if you could tweak that up just a little bit, it's going to add to your overall business's gross profit, which is why I like those categories broken down. And in some cases, you can look by SKU. So now you can take each individual product, each individual service, compare it against the companies, and you can look between what you see it doing as far as how it impacts your business one way or another, whether it's an expense or a cost of goods, whatever the case may be. So I know I'm rattling a lot of different things. Hopefully some of this is sticking. Some of this is making sense. Some of this is an aha moment based off of what you looked at in the past. I really encourage you to listen to this a second time with one of them in front of you, or at least with the video in front of you. I think it's going to make a lot more sense for you. But my main goal today was to help you understand your profit and loss a little bit better, and why I think it's one of the most important reports that you have on your business. It really truly is the main report card of your business. Don't be afraid. Like in the last episode, we talked about fear of knowing. Don't be afraid of knowing what it is. The only time I'm ever going to look down on somebody is if they know the information and they refuse to look at it. If you refuse to look at it, then that's where the problem comes in. You know you have a problem. I get being afraid to know those numbers, but honestly, you can't make a difference. And if you think you can outsell your stupidity and you can outsell your lack of knowledge, then you keep doing that. You keep busting your ass. You could work 70 hours, 80 hours. Go ahead and work 90, 100 hours. It doesn't matter. If you don't spend time understanding your business, then it makes zero sense, because I'm telling you, there's so much profitability and so much information at your fingertips right now today by looking at your profit and loss. And that's where you are missing the boat, and that's where you are missing a great opportunity. So if you have not been looking at your P&L and you're not familiar with it, then that's where we need to change that today, immediately. This needs to be one of the best tools that you have out there for you and your business. And all right. With that, I know I'm rattling, so it's time for me to say goodbye. And check out the video. It is in the show notes. And if you want to continue to learn more about your business numbers, don't forget to head over to knowyourbusinessnumberscourse.com. I'm putting a course together to help you, where I'm going to dive in a lot deeper than just these surface level videos that I'm putting out, because I know there's a lot of you guys that really want. I've been actually really amazed at how many people have been reaching out to me since we started this, because they really want to learn and understand their numbers better. And I've never been so proud of a subject that we've been tackling, because it seems to be touching a lot of people. And I love hearing from you. So if you want to reach out to me, I've been answering everybody. You can reach me at Tammy@localsmallbusinesscoach.com, Tammy@localsmallbusinesscoach.com. I'll be glad to have that first initial conversation with you, and kind of, whether you need a cheerleader or to know you're on the right track, or whatever the case may be. At this stage, I'm able to be able to answer everybody usually within 24 hours. And, who knows what the future has to hold, but for today I can do that. So take advantage of that if you want. And, but let's all, I'm on a mission. I really want to help you understand your numbers better. I think it's going to make you a way better, stronger, local business owner. All right. I am rattling, so it's time for me to go. All right. I will talk to you guys later on. Have a killer of the rest of the week. And, we'll talk again, early next week. Bye for now. Hey, badass business owner, if you're interested in taking your knowledge to the next level on understanding the numbers of your business, then head on over to knowyourbusinessnumberscourse.com and sign up to be one of the first to get any new items I put together to help you take your skills to the next level. Not only will you get immediate access to any new videos I create, but you'll also get copied on any tools I create to help you get better at understanding your business numbers. Plus, get any updates on the upcoming course, Know Your Business Numbers, where I will be taking a much deeper dive into the numbers that will help you become the badass business owner I know you are. So once again, if you want to keep building the skill, building this business muscle, check out the link in the show notes and head on over to knowyourbusinessnumberscourse.com and sign up now. Don't you think it's time to use your business numbers to earn more profits?